Hello. I'm trying to see if I can do it on my phone actually. Think it'll work. Let's forget the phone then. I wanted to try and go live on my phone because I thought the camera's clearer, but we'll just do it on the laptop. So, hello everybody. Welcome to tonight's live. I'm a little bit nervous. You'll probably be surprised about that, but yeah, I do get a bit nervous when I know it's like virtual, real-time type things. So as I said, tonight is going to be a Q&A. I'll ask you guys to send me through your questions, but also if you do have any questions while the session is ongoing, just type them in the chat section and I'll make sure that I'll answer those questions also. So I'll give a couple of minutes just to see if anybody else wants to join while I get my questions ready. Just going to look at the questions from my phone. Just give it a couple of minutes. Okay, so 2 pass. I'm just going to go ahead and get started, and then whoever joins in when they do. And I'll probably leave this up anyway, so you can replay it like later in your own time. So the first question: do you think there will be a housing crash soon? To be honest, I'm not an analyst, and I don't to be honest, I don't go into that level of detail. I do a lot of reading and research. Obviously, I'm a property sourcer also, so because of that, I do spend a lot of time sort of like sourcing properties. So I know at this point we're definitely in a peak whereby there's loads of movement in the market. Everybody's buying for various reasons. Obviously, there's a lot of stimulation. Government are helping people out a lot at these times. Obviously, there's things like the extension of the stamp duty holiday. There's things like the nationwide giving you 5.5 times your income for a mortgage. There's other things like what else, the 5% deposit scheme. So there's a lot of things that are stimulating people to want to buy at this point in time. And so in terms of a crash, I show that a lot of these things are coming to an end in, I think, is it next month? Between now and September anyway. And so obviously at that point, a lot of people will not be able to buy the kind of properties that maybe they're going to be able to buy now with that support from the government. So I do kind of feel like a crash is pending, but I can't say when. I can't say what exactly is going to trigger this, but I do feel like it's coming. But in saying that, I know that the reason that a lot of people ask whether I feel like a crash is coming or whether it's going to happen is because they're trying to anticipate when they should buy a property. And what I always say to this is that, no one can really time the market. Obviously, there are experienced analysts who really know how to look into this data and sort of determine when crashes will come and there'll be increases in property purchases. But I always say that just buy when it's comfortable for you, when it's affordable. You've got a budget for a property whereby if you buy this property, it's not going to put you out of pocket, and in the long run, it's going to be profitable. Because when you buy a property, it's a long-term game. You can't buy a property with the hopes that, okay, I'm going to buy this year and then, or I'm going to buy this month and then 2 months down the line, my money should have gone up or the property should have increased in value. You can't really do it like that. With property, it's literally like a waiting game. It could be 6 months, it could be a year. Could be 2 years before you really see the kind of capital growth and capital appreciation that you want to see. So I just say that as long as you're buying for the long term, literally it doesn't really matter at what point of the market you're really buying, as long as you buy at a good price for you, that is a price that is affordable, and also where it kind of fits the strategy that you're trying to do. So another thing that I also do say that is basically if you're doing it from the aspect of a property investor, at this kind of market whereby there's a lot of competition, properties are listed on Zoopla, Rightmove, people are getting above the asking price. What I would say is that you want to buy a property whereby you can add value from day one. So it doesn't have to be a complete dump, but a property whereby maybe if you've done a new kitchen, done a new bathroom, you could increase the value by at least 10, 20K. Those are the kind of properties that you want to get right now, because then at least you're giving yourself a head start, even though properties are pricier, but you're sort of getting that capital appreciation going. So yeah, that's what I say. Don't necessarily wait if you know that you can afford to buy now, but just buy a good deal for you. Buy something that you know is going to make sense for the strategy that you are doing. So hopefully I've answered that question well enough. I don't want to strain on too much, but if that was your question, let me know in the chat if I've answered that. And on that note, I'll move on to the next question. Hi, Abigael. Also, if anyone else is in the audience and they have a question that they didn't, submit before, please do let me know in the chat. So the next question was how to rent out spare bedrooms on a residential mortgage without a buy-to-let. This is pretty straightforward, to be honest. This is one of the easier things that you can do. So if you have a residential mortgage, you are allowed to have a lodger. That's the technical term for them. A lodger is somebody that sort of stays in your property at the same time as you, so you are a living landlord. Now, in order to be able to do this, all you really need to do is let your mortgage lender advise them that, you'd like to take on a lodger. Most times this shouldn't be an issue, but you just want to tell them, like, just in case there's any problems. As well as letting your mortgage lender know, you also want to inform your insurer, because if you've got building and contents insurance for your property, the likelihood is that your premiums may go up if it's a case whereby you now have a lodger, because now you've got, a totally new person in the property, also likely somebody that you don't know. And so in that case, your insurance premiums may change. So you probably want to let your insurer also know. Outside of those two things, those are only the real things that you need to do. I think when you get a lodger, also you don't pay tax on the first, I think, £7,000 that you make in rental income from that lodger. So that's another good thing as well. So yeah, renting out spare rooms in your residential property is definitely a great idea if you're comfortable with that kind of situation. Great way to make some additional income. Hey, Abby. So yeah, that's that question. What's the next question now? So this question also follows on from the one about the lodger. Do you have any knowledge tips on letting out a spare room on a residential mortgage? So as I said earlier, same process, speak to your mortgage lender, speak to your insurer, or let them know that you're getting a lodger in place. And then in terms of, like, I guess, renting out the room itself, getting people in, you want to create a listing. So I like to use open rent, or you can use spare room. So you list your property, let people know that it's going to be available, when it's going to be available from. Vetting is also another major thing. When it comes to bringing somebody into your home, at the end of the day, you're also going to be living in this property at the same time that, a potential stranger is also living there. And so you want to make sure that you really vet this person, because you don't want to be inviting strange, weird person into your property. So you really want to vet it. You really want to vet them, sorry. So that means, background checks, employment checks, making sure there's somebody that's going to be able to pay the rent, and all the other kind of things that you would do if you're renting out the full house to, somebody else. I think that's also that for that question. Next one, as a landlord, would I need to furnish the property? I would think I need to buy at least the beds, beddings, and wardrobes. So as a landlord, you do not have to furnish a property. It's totally your choice. You can offer it furnished or furnished. Furnished property, though, you will get more rent from it, because you've supplied all the things that the tenant will need. So beds, furniture for the living room, all those kind of things. But it's not mandatory. It's down to you, really. If you are doing a HMO strategy, which is a house of multiple occupation, you're more than likely to furnish property to a degree, because it's just how it really works. If you're doing a HMO where you're renting out the rooms on an individual basis, you sort of need to supply the basics, which is bedding and all those kind of things to furnish a bedroom. Outside of that, there's no obligation from you as a landlord to furnish a property. It's totally down to you and what you want to do. Next question. Is it possible to reduce my offer on a property after placing an initial offer? Yes, it's definitely possible. So if you've placed an offer on a property and maybe you realize that actually I've offered too much on the property, you can go back and either retract your offer or say that, you know, you want to offer less for whatever reason you have. Obviously, the buyer may not be too pleased about that because it's like you're kind of messing them about. But, you know, at the end of the day, you haven't exchanged contracts and therefore you can do what you want. Like, it's your money. No one can tie you down to buying something if you don't want to buy it at a certain price. So, yeah, if you want to retract your offer for whatever reason, then do go ahead and do so. Make sure that you do your research, find out as much about the property as you can before exchanging contracts, because it's when you exchange contracts that legally you are binded to buy a property. You don't want yourself in that situation unless like you're definitely sure. So yeah, that is a very good question. To be honest, those were my questions for tonight. I didn't get any other earlier submissions. So I don't know if you guys in the audience have any other questions, or would you like me to elaborate on any of the questions that I've already spoken on? If I've missed anything or you're unsure about anything, please do let me know. It's quite an interesting one doing lives on here. I've never done this before, but I do like it. So yeah, yeah, just to let me know, guys, anything, literally, it doesn't have to be property, it doesn't have to be personal finance, anything. My partner is not interested in investing, my credit rating is poor. Should I look to joint investment? Yeah, I mean, it depends. If you wanna, are you talking about investing with people like family members or friends that you know of? Like, you definitely wanna, you know, joint venture with people that you can trust. So that's the only thing. Vet the people that you want to do the joint investment with. That's definitely a good idea. A lot of people do this. It's a great way to start investing if you don't have the funds on your own and, you know, you really like to grow your portfolio quicker. So yeah, that's definitely a good way to go about it. G Truly, do you have any advice for people who are doing a right to buy scheme with their council? Are they also allowed to get a lodger in? Don't quote me on this, but I don't think that if you've got a right to buy a council property, you're allowed to do that. You may need to check with your council though, but I don't technically feel that you can. Obviously, if you do go ahead and buy the property, then, you know, it's your choice what you do with it, I believe, but you need to check the terms of your agreement with the council. So yeah, sorry if I can't really answer that question properly, but that's something you need to check with your council because it does vary. So yes. Oh, sorry, I missed some of your earlier questions, but could you give your opinion on how far ahead you should be looking into potential properties and houses? Say you aren't quite ready to buy yet. How far ahead? How do you mean? Like, so if you're saving up for a property, I kind of feel like it's always good to have an idea of the kind of property that you want. And so that will give you the sort of like time scales that you should be working towards and how long you'd need to be able to get that property. How much your house prices vary over, say, a year? It depends really, because in the last, what, I think they said that we've seen an increase in property prices over like 200% in the last 10 years or so. So you can't, it's not one of those things that you can say that, you know, year on year properties increased by this much or that much. But all I can say is that last year, just before my parents bought this property, like house prices had dipped. But now we're in a place whereby there's so much competition that if you see a property listed for £200,000 on Zoopla, you can almost guarantee that that property is going to get sold for like £210,000 or even more. So yeah, it's a tricky one. You just have to keep watching the market. What is a good area close to London that you would recommend people look at? So I would say close to London, loads of great little areas. Dagenham's definitely up there. Barking's up and coming. They're creating Barking Riverside, which is like a development within Barking. They're also extending the train line to go over to Barking Riverside. And Barking Riverside is quite a good one because I think they're more or less creating like a hub over there. So there's going to be like restaurants, there's going to be like places of leisure and all things like that. So that's another area to look into. Of course, you've got Essex. Essex is massive. There's loads of, different areas there. Grays is popular. Tilbury. Where else? You've got places in Kent. Just seen another question pop up. Yeah, there's all over the place really. Aylesbury is another area that I've come across recently. That's sort of in the Buckinghamshire area. So there's loads of like little spots. What I'd recommend is basically going to Zoopla or Rightmove and then putting your area and then the number of miles out that you'd be willing to travel and sort of go from there and see what suits you. Next question. Do you recommend property investment with businesses? So again, is it like a joint venture thing? If so, again, I'd just say look into the company, look into what they're saying that they can do for you. Like what kind of joint venture would it be? Would it be a case whereby they're supplying the finances? Or is it a case where you'd put in some finance and they project manage? Are you going to split the costs? Like you want to identify those things, how the partnership would work, and then really just decide if one, the company is a good fit for you and whether you think really it's worthwhile going into business with them, because essentially that's what you'd be doing. So that's my answer to that. Hopefully that is that clarifies that for you. Was just about to say that aside from Essex or Kent, can you recommend any area outside of London that are just as close but also not too expensive? Yeah, Deborah, hopefully I'll answer that question with the other areas like Aylesbury and like Buckinghamshire, around that area that you could look into. Question. Hi, Abigail. What are your opinions on getting a cash lifetime ISA as opposed to a stocks and shares ISA? To be honest, I think you should get both. So I don't have a lifetime ISA because I sort of missed that at the time. Well, I wouldn't have been eligible for getting a buy-to-let property. But I think you can have both. Like, they're both great. You can have up to 20K in your ISA each year. A stocks and shares ISA is a great one because it tracks, various businesses and industries. And so in essence, to get a lot more of your money. So with my stocks and shares ISA, well, it's called an investment ISA, it's been tracking 9%. So I've actually got 9% on my money in the period from July last year up until last month. So I think you should invest in both, really. You should definitely invest in both. I mean, with the lifetime ISA, you're eligible to get, 25% on top of whatever you save each year. I can't remember exactly the percentage that the government give you, but it's definitely worthwhile. Definitely worthwhile. No, I cannot buy your house there at Aremu. Thank you, Abigael. Can you list some of the top things you look out for when checking a house over to buy, like things people often forget but are important or can add up if not checked? So the first thing, when you're interested in buying a house, you most definitely want to do a survey on the property. So that is a structural survey. A lot of mortgage lenders will do like a basic survey. And when they do those basic ones, a lot of the time they don't even need to go into the property to do that survey. They could just be outside, look at the building, and they can confirm that the mortgage that they're going to give you is worth the value of that property just by seeing it from outside. But you want to take it a step further and do the structural survey, which costs anything from like £300, depending on the type of property that it is and the value of the property. And that structural survey is just going to do like a thorough check of like, if there are any potential issues. So maybe issues with the roofs, issues with like movement in a property. So we had that with one of the properties that we went to view before my parents got this one. So there were signs of movement in that other property, which is why we actually didn't go for it. Now, signs of movement isn't great because, as you can imagine, it just goes to show that a property is not stable. in the long term, if that's not dealt with, that could be really expensive to deal with. So yeah, doing that survey. And then also, even before it gets to the survey stage, it's just when you're out on viewings, being very vigilant and just really taking your time to observe things. Like, don't be too carried away with aesthetics and how something looks. Like you also want to pay attention to things like, you know, signs of damp, maybe if there was a leak previously in the property, cracks in walls. Also, how soundproof is a property? So is it a case whereby you can easily hear neighbors, or the walls thin, like things like that? There's so many things that, you know, you can easily overlook when you're excited about buying a property, especially if it's your first one. But I just say really paying attention to the details, going on multiple viewings, like viewing a property, you know, a good few times, 3-4 times before actually buying it. So I hope that helps. Next, I have a friend who bought a property as a residential, as the deposit was cheaper than a buy to let, but she rents it out to a tenant, not as a lodger. Okay. What's your opinion on this? Well, my opinion is that you're not supposed to do that. So yeah, like if she's getting away with that, then, you know, great. But yeah, it's not something you're supposed to do. But to be honest, maybe she might have a consent to let from her mortgage lender. I don't know. That's another thing that you can also do. If you've got a residential property, you can request consent from your mortgage lender to rent it out to tenants. But usually that's for like a term, maybe a couple of years or something like that. So that's that. Do you truly? A personal one. What's the next for you in terms of your property journey? What's your next steps? Interesting that you asked that. I've actually been looking into my own place. I think that's sort of next on the agenda, to be honest. But I don't really want to get into that too much. I'm someone that doesn't really like to talk before I've done something. So that's out there now. I'm sort of looking at that side of things. Out of all the different incentives, helps, mortgage, or deposit options are available at the moment, which do you think are best? So I know a lot of people say don't go for the 5% deposit, but I personally say you want to speak to a mortgage broker and see what they're saying for your personal situation. Like, I don't think you should just write it off because they say interests are the highest on the 5% mortgage. I think speak to a broker, get them to show you an illustration of what for 5% deposit could mean for you. If it's feasible and it makes sense, then why would you not go for it? So I would definitely look into that. You know, if I was a first-time buyer getting a residential property. Again, stamp duty, if you're able to buy a property before the stamp duty holiday ends, definitely take advantage of that. And just there's loads of little schemes like the Nationwide Helping Hand scheme. So with that one, you can get 5.5 times your salary as a mortgage loan. So that's another good one. You know, normally you'd only be able to get like 4 or 4.5 times your salary. Sorry. So that one's a great incentive as well. So, but with that one, I think it's quite limited in terms of the budget they have for it. I think it's just over $1 million. So you can imagine if a lot of people rush to go and get that product, it's going to be gone before you know it. So all of these schemes, I say, if you're interested in buying a property anytime in the near future, definitely go and speak to brokers and see what they can do for you. I think that's always the first step. Like speaking to brokers when it comes to getting a house, that is really your best bet, because when you go straight to the banks and your high street lenders, they're so tight, like they're literally very stingy. That's where you go wrong. Supposed to be me on the agenda. What? Do you truly? I'm not buying Deborah a house, right? Deborah, go and do the 5% deposit scheme. Guys, Deborah's my sister, if you hadn't guessed. So, yeah, this has been good. I feel like we've covered a variety of topics from investment side to residential and things like that. So, yeah. This has been a good session. Hopefully you guys have found it useful and I've answered all your questions. Again, if you have any other questions that we haven't covered or anything that's just, you know, popped up in your mind, please let me know in the chat and I can cover that before I close the session. Thank you. Can you buy a residential property then rent it out? So again, with a residential property, you can rent out individual rooms. So let's say you bought a 3-bed house and you're only occupying one. If you wanted to rent out the 2 other rooms to lodgers, you're more than welcome to do that. That's legal. You just need to let your lender know. Also possibly let your insurer know, because you may need to change, like, terms of your insurance for your building and your contents. Outside of a lodger, I think if you want to rent out the whole place and you've got a residential mortgage, you need to let your lender know. So you need to get what is called a consent to let. That's what makes it legal. Outside of that, if it's a residential mortgage, then you need to live in it. Otherwise, you need to get a buy to let if you want to rent it out to people. So yeah, that's what I need. That's what I have to say on that one. Oh, thanks, guys. Oh, I appreciate you for showing up tonight. I think I'm gonna start doing more of these. So yeah, what time is it now? 7:25. I think that's a fair time. So if everybody's happy that I've answered their questions, no other questions, nothing like in the back of your mind that you're scared to ask, don't be afraid. Just, as I said, ask me anything. Such a natural. Thank you. Thank you, Debs. Right then, I think that's it. Thank you all for joining tonight. I really appreciate it, and hope you all have a lovely rest of the evening. And I'll speak to you later. Bye.